SBC Media.
SBC Leaders connects the gambling industry's top-tier operators and associations to share the best ideas, collaborate on solving the biggest issues, and push innovation throughout the betting and gaming industry. If you're an operator and want to join the discussion, visit sbcleaders.com for more information.
It's been a mere 2 weeks into 2024, and already there's big noises coming out of the UK giants bet365 and Entain. Publishing its 2022-2023 financial accounts, bet365 declared corporate losses of £60 million as the UK's biggest online gambling brand expanded its corporate resources to overcome new regulatory duties and enlarged its tech unit to execute localised expansions within new markets. Beginning a new year, the board of Entain confirmed via an internal memo its exit from 140 markets to comply with its new corporate responsibilities and duties to investors. Industry eyes continue to monitor Entain developments closely, following the resignation of CEO Jette Nygaard-Andersen and Entain's appointment of activist investor Ricky Sandler to its board. So, what do the contrast and similarities of the challenges faced by UK giants tell us about the year ahead for the industry's biggest names? These will be the questions asked in Tuesday's episode of iGaming Daily, sponsored by SBC Summit Rio, where I, your host James Ross, am joined by SBC's Content Director Ted Memwe and SBC's Media Projects Director Martin Elliott. Oh, I don't know why I paused there. So, are you both doing you okay?
Very good.
How are you both doing? You okay?
Yeah, good, James. Good to be back.
Good. Okay. And Martin, are you okay?
Yeah, I'm very well, thanks. You're going to have to work on those pointing skills, I think, in the studio.
Yeah, it doesn't help when Ted's remote and he can't see my webcam.
Yeah.
I'm just like trying to point to anyone. Well, perfect. So, already discussed what the topics are going to be about today. And the first half of the show, we're going to be focused on bet365, and then in the second half, it'll be on Entain, and that's how it's going to go. Second half will be Entain. So let's start with the £60 million loss. And Ted, can you just break down the loss account for the year 2022 and 2023 for bet365?
Okay, so bet365, which is a private company, and thus it publishes its yearly accounts every year with Companies House. Mm-hmm. Detailed its performance for the financial year of 2022 to 2023, in which it generated revenues of 3.4 billion, which is a 90% increase on the corresponding year. And it sees bet365 return back to generating yearly revenue mark of 3 billion. Bottom line performance saw it declare losses of 60 million. However, that is kind of attributed to higher spending, which totaled 585 million on operating costs, primarily directed to making all forthcoming adjustments for UK regulatory adjustments, as we've seen across the board, and a lot of investment on increasing resources and developing its technology units for localized products, expanding its live gaming platform, and increasing provisions of its proprietary systems, such as Bet Builder and which was the last one? I need to see that again.
No, it's fine. While you figure that out, it's let's.
It's Casino Engine. Recommending Casino Engine. Yes,
it's fine. And bet365, they remain a private company, and unlike other public listed companies, they publish their accounts annually. First question, I'll ask it to both Martin and Ted. Why is it harder to compare and contrast its performance against its rivals? Obviously, one of the main reasons being private. But then also, what is the kind of industry / analysis reactions to these results? And Martin, actually, we'll start with you on this one.
Yeah, so it is very different if you're a private company than a listed company. you can be a bit more straightforward in your accounts. You don't need to have the sort of accountant's profit that your institutional investors want to see every year. If you don't have to look too deeply into the Bet365 report to see areas where they could have, how shall I put it, finessed those accounts so the bottom, so that it did come up with a nominal profit number at the bottom of it. I mean, the big one being executive salaries, for instance, which I think maybe we'll come back to in a minute.
I think we will, yeah.
Yeah. They've grown their headcount this year by 1,400. You would struggle to get away with that in a public company while making a loss. So it's just things like that. And if you look into their accounts, actually the company's in a healthy position. There is nothing to worry about with a £60 million loss on this. It could be accounted in a different way and be presented a lot more positively, I think. The interesting thing, I think, here is how they're going to react to the changing regulatory picture, particularly in the UK, and some of the investments they're going to have to make in technology there, compared to what Entain are doing, what Flutter are doing, and the size of investments they're going to have there. And also, it looks like their spending on product is huge. It's a bit difficult to tell from they haven't allocated exact amounts against it. But one of the reasons Bet365 has been a market leader for so long is its technology and its product has been absolute market leading all the time, all the way through on this stuff, on the sportsbook side of things. Anyway, they're catching up a bit now on the casino side as well. But they might be losing a bit of that lead because other companies are investing heavily as well. So the comparisons between them and the other big players in the other big global players, I think we can call them, Flutter and Entain, is quite interesting in that regard as well.
Ted, anything to add to that one?
No, I think Martin has summed it up really well. And no, there's not a lot to add there. You just have to understand just how ambitious Bet365 are, and one of the things is that they really, really back their strategy of building kind of proprietary systems, going out there, not being dependent on kind of third parties to deliver or to build its infrastructure, and they are an incredible success story of British tech.
So, Martin you mentioned the technology side of things, and Ted's just mentioned it then. What are these technologies that they're expanding resources into?
Well, I think, Ted, you touched on them a little bit in your first answer. They are doubling down on their Bet Builder product, quite obviously. The idea now that any major operator is going to go have an offer that doesn't have a really strong Bet Builder is, you're on a loser straight away. It's a product that's hit the market and across the board has been hugely popular. And because it's a bit of an exaggeration to say that they're playing catch-up on the casino side of things, but they've traditionally been much stronger on sports than casino. They've got some of their own games coming through from partnerships with various studios and with in-house teams. I'm not sure how expensive that is in the greater sort of 3 billion revenue sort of landscape, but they're really keen on this casino, I think they call it casino recommendation engine, which is to drive players towards the games those individual players find the most engaging and will come back to and play again and again. All about customer retention, which we know is really difficult in that casino space.
Yeah, definitely.
Yeah. One thing to add there is what the numbers tell us, especially if it's reflective of that period, and we've seen it from other kind of gaming operators, is that Bet365, like the PLCs, is shifting, and it's shifting more accordingly to a recreational player strategy. not only for its sportsbook, but for its online casino. Now, one of the things that I think that we're going to see there is that it's also going to build or concentrate its development on building kind of proprietary systems for compliance and for the way it checks its customer base. So again, the success of bet365, it's a very independent company within its internal processes and how it approaches its strategy. And it's very good at it too.
Mm-hmm. And there is one thing that I do want to acknowledge, because we were talking about Bet365 and £60 million losses. Martin, you said it's actually not that big of a deal. Mm. But in a year where they have had loss, and this is from a BBC News article by Laura Jones, she reports that the boss of Bet365 was paid around £221 million during its last financial year, despite the gambling company reporting a significant loss. This salary was £7 million higher than the previous year, according to Bet365's latest accounts for the year to March 2023. It must be noted it is also, I believe, nearly half less than what she got in 2020. I think she got £421 million that year for annual salary. I just want to get your thoughts on this. If a company is reporting £60 million in overall losses, but the boss is earning £221 million in salary herself, I mean, from a moral standpoint, it's probably not nice, but I just want to get your thoughts on it.
Well, company directors have a legal obligation to act in the best interests of the shareholders, as long as they're doing so within the law. Who are the biggest shareholders at or I think maybe the only shareholders of Bet365 are the Coates family. I have no problem with Denise Coates' salary. This is a confected row every year when this report comes out, as far as I'm concerned. The greater good that company has done in terms of creating a lot of jobs in an area where employment was in short supply, around Stoke, and big tech centre now in Manchester as well. And they're not just minimum wage jobs, as you might see, like Sports Direct go to places where there aren't many jobs and employ people on 0 hours contracts on minimum wage.
There's your Newcastle allegiance coming out.
Yeah, have that, Mike Ashley. I don't think Mike Ashley will lose any sleep about my opinion. He never has done previously. But these are high-value jobs, a lot of them, high-value tech jobs, a lot of money going into training and so on. And, you know, that brings up the whole economy of that local area. As long as, you know, the right level of income tax is being paid on those salaries, good on them. If the directors of SBC are listening, if you want to pay me £270 million, I'm willing to accept it.
Oh. Ted?
Yeah, I want to kind of highlight what Regulus Partners, an industry analyst, commented on the Bet365 results. And we all know that Bet365 is a cash cow for the Coates family. However, I think where kind of the industry observers are kind of looking at is that with this kind of stockpile of cash, is it time for Bet365 to actually trigger an M&A and look at kind of expansion strategies for new markets in the US and South America? Because, look, Bet365 have been the leader of the pack in technology, in the sportsbook market. However, that strategy is going to be tested by new market entries, and just the level of kind of investment and resources needed to go into each market, you know, be it Brazil or South America. So the kind of Coates, the movement to the Coates family will really be closely monitored this year, I feel.
Mm-hmm. I think there's one thing I would ask Denise Coates to buy with that £221 million, and that's to get Ted a less squeaky chair. Well, perfect. Like, we'll round off the first part of this show. We'll go to a quick ad break, but when we return, we'll talk all about Entain.
Brazil, a global economic powerhouse, deeply passionate about sports, and now home to one of the hottest markets in gaming. And we're giving it the full SBC treatment. Join industry leaders, market experts, and all the major players in the country for 3 days of content, exhibition, and epic networking at the first ever SBC Summit Rio.
Cool. So, welcome back. Like I said before the ad break, we're going to talk about Entain. And Martin, I'll come to you. Can you just give us a brief overview of the latest news coming out of Entain? And
Sure. I'm sure anyone who's interested enough in the gambling industry to be listening to this podcast would know that last year, the back end of last year, Entain finally reached a deferred prosecution agreement with the Crown Prosecution Service. They'd been investigated by Her Majesty's Revenue and Customs in relation to a bribery probe in a Turkish business, which I think they divested in 2017. It was quite some time ago. And they ended up paying roughly £585 million, or they will be paying £585 million to Revenues and Customs over the next few years. There are a number of stipulations within this agreement. One of them is that they would exit all unregulated markets, which, if you know the history of GVC as it was prior to the rebrand as Entain, they'd made a lot of money over the years from unregulated markets, recycled that money from the profits from those markets into acquisitions in regulated markets. And that's how they kind of built their business to the huge global operator it is now. So they'd said, they trumpeted this a little bit, and they obviously told the authorities that they'd left 140 unregulated territories. Now, that is kind of true, but the Financial Times has got hold of an internal document which listed those 140 territories. And they were quite surprised to discover that they included the Pitcairn Islands, the Vatican City, and Antarctica. So perhaps 140 might be stretching it a bit on that list. But we do know they'd also left Russia, Argentina, Ukraine, places like that as well. So it looks like they are very much complying with the terms of the agreement, but they couldn't resist a little bit of exaggeration in some of the things they were talking about it. And that's one story. I guess that's the sort of, I don't know if you can ever joke about a £580 million penalty. Mm-hmm. Certainly shareholders won't be. But that's the more humorous part of the news on Entain. The more recent development, which I think is probably more important, longer term, obviously, the CEO, Jette Nygaard-Andersen, which I hope I've pronounced correctly.
I think you pronounced it better than I did.
Okay. Has left and coming on board, and this has been a direction of travel that's been, going on a long time, is a guy called Ricky Sandler has now gone onto the board at Entain. Now, that's important because he's the founder of a sort of activist investment fund called Eminence Capital, and he's been publicly very critical of Entain's overall strategy, particularly around its aggressive M&A policy. And we know there are other hedge funds and so on who are invested in Entain who are privately critical of that strategy as well, and they leaked a bit to the press, the business press, and so on. But now they've got their voice on the board, so it's going to be really interesting to see how that results in a change in strategy throughout 2024 and beyond.
On the Vatican City news, I think me and Pope Francis need to have a sit down and compare accumulators for the weekend.
I think so, yeah. I mean, I know he's a big San Lorenzo fan, so maybe he's back in there, but at the Coral St. Peter's Square branch, I don't know, but seems unlikely.
Yeah, so when I visited the Vatican City, I don't think a Coral branch was the one thing I was looking at.
No.
Or looking forward, to be honest. Yeah. But you mentioned about Ricky Sandler, and you mentioned he's an activist as well. But do we now have a clearer picture on how Entain will kind of reorganise its business with someone like Ricky Sandler on board?
Well, Ted might know a little bit more about this than me, I think.
So if I was a Netflix commissioner, I would probably choose to do kind of a documentary or a drama series about what Entain have been through in the past year.
What'd you call it?
And I think kind of because I think it's been the kind of the most interesting story to follow, and also kind of that development of the kind of boardroom conflicts going on at the company. Now, Ricky Sandler has questioned the strategy of Entain's leadership under Jette, and we're now going through Entain faces now the reality of it has to reorganize its business. But actually, I don't think it was clear. It's like, where do you start, and what is the end goal for Entain? I mean, is it what's it going to keep, and is it still that the preferred outcome for investors is this sale to BetMGM, and at what value? So, what is the price of Entain as stands to market?
Okay, so just to round up the podcast, what do Entain challenges tell us about the coming year for operators and leadership moving forward? And Martin, we'll start with you, and then we'll finish on Ted.
Well, in many ways, Entain faces the same challenges as the other big global operators in terms of the changing regulatory picture and challenges in the financial markets. We don't know they're going to, particularly the London market, is it going to remain relatively depressed in terms of the values and so on. I mean, but I think Entain has some specific challenges as well. It lost significant value last year from its share price, and it faces the challenge of how the leadership team faces the challenge of how it rebuilds that value to what shareholders expect. Because I think Ted is right to say that a lot of those institutional investors bought into Entain on the basis they expected it to be acquired by someone else, but they're not going to be happy with the sale at anything like the current share price. So does that mean selling off some of the assets it's bought in the last few years to make it a bit a slimmed down operation, carrying less debt, because that's a major concern for some of these investors, or are they just going to carry on doing what they're doing and hope for the best? Because actually the leadership team itself has not changed that much yet, but let's see what happens.
Yeah, wait and see.
Yeah.
Ted, do you want to round us off?
Yes, so Entain is a vessel that's grown through numerous M&As. And I think what its troubles point to is that shareholders now and investors are much more sensitive, or they are reviewing kind of previous M&A strategies and really detailing, look, what is adding value to the market in our portfolio. I think that the troubles that Entain have gone through can easily be replicated across other companies that are as big or even smaller than Entain. So I think this year it's going to be the year of the CEO. Lots of eyes on their movements, on their actually long-term strategy that is beyond just we're building a company to get sold, or we're building kind of these M&A vehicles. I think now it's really about your operational strategy, how you localize the market, and your end product. Are you the best?
Mm-hmm. You said it right there. A lot of eyes will be on Entain moving forward, and for the listeners, all your eyes should be on SBC News, where Ted and his team will keep you up to date with everything involving Entain moving forward in 2024, and Bet365. That's all we've got time for today. All the topics that we discussed in today's podcast, I will leave a link in the description below. But apart from that, Martin Elliott and Ted Menway, thank you for joining me today. And to our listeners out there, you'll hear from me tomorrow. Thank you and goodbye.
SVC Media.